Well, good morning, traders. This is the FX Big Dog, and welcome to another market update. This, of course, will be the last video session for the week, being it Friday. If you have any questions regarding this review, please email me at analysis@infinitumfx.com or click onto our helpline link on our website for a private live chat. Don't forget, traders, that you can follow me on Twitter. Just search the name FX Big Dog or Infinitum FX on the Twitter website. No, traders, trading the forex market is very risky, and is intended only for investors that can afford the risk. This video presentation is for educational purpose and not offering trade recommendations. If you choose to follow a trade presented in the video, it will be, of course, at your own risk, and we do not accept any accountability for your actions. We are of the understanding that all traders have the full understanding of the risk and are responsible traders. Please do not trade a live account unless you have traded a successful strategy on a demo account for some time. Alright, traders, let's get started, and this is the US market review for August, 28th of August 2009. Alright, looking at the situation right now, you can see that the market, and this is looking at the 60-minute time frame, we can see that the market has extended itself to this objection point of this, and this is called what we call a Gartley swing. It is a Gartley swing inside a down AB swing. So we have a Gartley bullish swing, hit the D extension. Now remember, it doesn't have to hit it to the pip. It came about 15 pips away. Let's see, the high was 63.80. Yes, it was. It came 15 pips shy of the D. That's okay. Within that range is fine. This is the 60-minute time frame. So we hit a D extension. The Gartley has paid off. Now what we need to do is we need to start looking for the movement going in the opposite direction of the Gartley, and that'll be in the direction of the trend. So what we do is we put in what we call a counter trend line, and what we'd like to see, of course, is a bearish candle formation form below this trend line. Now the reason why we're looking for bearish movement is because we are in a down AB swing until it takes out 64.45. We of course are bearish. I know we've broken this trend line, but remember, traders, this trend line acts as a 50-50%, which means that in layman terms is if it breaks above the trend line, it has a 50% chance of reversal. It needs to take out the A high. If it takes out the A high, then we have an 80% chance of reversal. Right now, we're still 50-50. So what we want to do is we want to make sure that the market is still bearish, and for us to consider that the market is still bearish, we'd have to wait for the trend line to be breached, this counter trend line I'm referring to, and once it trades below the counter trend line, we can start looking for perhaps a small crown setup. Now let me show you what I mean. Here we have the market that it rallied up, formed a tip, dipped down, took out the high, this high right here. Now we need, of course, it to break down, take out these lows right here. Now do remember, traders, we don't necessarily have to get, or we won't necessarily get the perfect setup, meaning that it takes out the low, and then of course it starts pulling back up again. Now it could still pull back up and test the backside of this trend line, or just pull up to this level right here to form that crown setup, and of course that'll be your entry. Now what you need to do is you need to start looking for, of course, the fib levels. Take your fib levels and place them from the high to the low of this move, okay? And you'll see a 38250 bounce. You'll be looking at one of these three, which I call the three musketeers, because once it hits one of these three musketeers right here, the 618, the 50, the 382 bounce, at resistance, which could be this area right here, which is the left tip, the market would bounce off that and head towards the objection point, which we call the D. Then that'll be, of course, down here at 61.39. Now remember, I'm just surmising where the market's going to be moving right now, but this is what you'll have to do once the market takes those moves. If it's not bearish below this trend line and you don't have bearish candle formation, it's probably good to rather to stand aside and wait for the market to break this level. Alright traders, well this is the setup that we have on the 60-minute time frame. You can see we can move up a little higher and just pop up to the 240, and popping up on the 240 we can see, alright, well the 240 is going to close at 10 o'clock Eastern Standard Time. That of course is how my charts are set up. Yours might be a little different. Just remember it is a 4-hour candle, so every 4 hours a new candle will develop. Now this candle, the 4-hour candle, as you can see, has pulled back up to the 382 bounds. Now what we're looking for is some type of indecision at resistance. If we find indecision at resistance, then it certainly will start paying off on the lower time frames. So pay attention as we head towards 10 o'clock Eastern Standard Time. Of course, this is how my charts are set up. If we get indecision candle, we could look for something on the lower time frame to trade bearish. And if we find something that's tradable on the lower time frame, we can start chasing after two things. Number one, after we can chase after the de-extension of the 240, or we can chase after the de-extension of that lower time frame. So if I go to these 60-minute swings and I find that we've traded this swing, let's say we've got our bearish, or not bearish, but an indecision on the 240, the market does take out the low right here, starts a new swing, pulls back to a 382 bounds, I can look for these signals right here, or these entries right here, to trade towards the de-extension. Now, in my training videos, I go into more detail about how to find specific entry levels and where to place specific stops. I'm not going to go through that right now because that of course would be everyone else trades a different type of strategy. If you have gone through my lessons and you go and trade my strategy, of course then you'll apply my entries on entry orders as well as of course stop orders and limit taking. Alright traders, well that's pretty much the wrap up for this morning. Of course there will not be too much tweeting going on today, being it Friday. We close a little early Friday by 11 o'clock. There will be of course no more tweeting, but until then of course we'll be posting all the videos on the website. And do remember traders, if you want to see the archived videos, they are on the website. So go to infinitumfx.com and you'll be able to go to Forex Analysis, and there you'll be able to view all the videos that have been posted on the website. Just click onto the daily market videos and you'll be able to look at all the archived videos. Thank you traders, have a blessed day and a great weekend.